All right. Good afternoon, you guys. It is Sunday afternoon, August 25th. We are looking at a weekly outlook. This is Cedar with Market Mastermind. I have Eva here for a weekly outlook. Super excited to get this week kicked off. So, want to welcome Eva to talk about what she's looking for her watch list.
Awesome. Thank you so much for inviting me, Cedar.
I'm so
And
excited.
yeah, let's get to it. Pretty much both of us know major hitter for this week is NVIDIA earnings on Wednesday after market closes. And of course, I believe we have let me look, the economic calendar. If you're able to see it, on Friday, we have core PC data on Friday. So those
Yeah.
are really the two things I really see actually moving the market. Other than that, it really just depends on Nvidia. I just feel like there's so much riding on this stock because we're just so close from all-time high. Nvidia could either pop us higher or we could have like a pop on the interim in the market. So a lot riding on Nvidia. So what's your thought on it? I personally
So for
think the
me, I'm
setup,
I'm looking at
yeah.
more kind of the bigger picture of where we are
Mhm,
seasonality wise, trying to decide if, headed into a holiday week next week,
mhm,
what's going to happen. And I think this is one of the most interesting weeks to be trading in the last 20 years because we're in a
mhm,
presidential election cycle that has not been experienced in our lifetime. And I'm 48, so
mhm,
long lifetime. So re-election potential in the incumbent party with a potential for rate drops and some other things that
mhm,
have been much more complicated this fall that are once in a lifetime, not even once in a generation, but once in a lifetime kind of experiences. So where
mhm,
you see everyone talking about, oh, it's, September seasonality coming in, that kind of thing. I I don't want to
yeah.
put all my eggs in one basket. I guess that's the how that proverbial saying goes, because it really
Mhm,
goes back to what the market tends to look forward by 6 months. And so I think there's a lot of people looking at it from a like next month, 2 months, 3 months out. Market looks 6 months forward and beyond. And what really scares the market is things that are unknown. And the election can
mhm,
definitely be considered that. But I think there's a huge impact that will be had on AI. And we even saw that with the Walmart earnings when the discussion was about AI with that CEO. And
mhm.
we were like, even Walmart. Yeah. And that makes complete sense to me, having watched this unfold for a long time. But yeah, I really think that's a huge piece. So looking at your charts, if you want to run through, and I'm going to have to crop this video just so I can see the
Mhm.
levels a little bit better for members once
Yeah.
we get it posted. But that's completely
Mhm.
fine. So if you want to walk me through how you mark those levels to understand, because we all mark our levels differently. I use VRVP for them. Looks like you probably
Mhm.
use candles, which is what most people do. And that's what I wanted to like highlight is how each of us look at the market differently. But a lot of the times you'll see us coming into similar positions with completely different backgrounds, which I love because then it's confluence.
Mhm. Perfect. Usually how I get my peak lines, I actually use Fibonacci retracement levels. So for stocks that aren't already making new all-time high, this is Trading Text. I basically use the Fibonacci retracement, take it from all-time high and to the next swing low. So I also set it up. So if you click and drag, it's not entirely all synced up. So all-time high, I believe, was 140.76
So you're
and
hand
the
entering the
140.
coordinates, which is huge because you can think you have
Yeah.
anchored something, and I have the like magnet attachments, and sometimes I'll go in and be like, it's
Mhm.
$1 off. So yeah, knowing to go in and edit those coordinates, I think is a huge, and it's not hard. It's a huge piece
Mhm.
to make, especially once you start looking at bigger extension ranges, it can make a big
Yeah.
difference.
Yeah, definitely. So if you look at this chart, I usually just round it up to next whole number. So if it's above like 0.51, I usually just do like 103 instead of 102. This one's a little bit easier at 141 because it's closer to 141. So that's usually how I get my levels. And it kind of really tells me like if I know if price action is going to break 130 and we hold above 130, more than likely the price action is going to magnet towards the next resistance. Same thing for support. When it's broken, it's going to magnet towards the next strong support level. So that's what I like to use regarding my target prices. So I know if like if let's say for NVIDIA, I saw a ton of 130 flows, 135 calls, even like 145. Heading into earnings, then I know some of the market makers are pricing at least NVIDIA to the move to the upside because the flow, it's targeting like how should I say it's so bullish. It's like 59 million. This is just excluding it saying 25 is supposed to be Friday's flow, but there's so
Yeah,
much
I've
of it
seen
targeting
so much Nvidia.
130.
I mean, it's been
It's
crazy.
insane.
There's been a little there's a
Mhm,
little bearish flow, like which you should expect. And I've been talking about that a
mhm,
bunch where options were originally created as a hedge. We're using them in
mhm,
a different environment from a directional, just naked kind of position. If you're not doing something like the wheel strategy or selling premium, as the case may be, because some people like the wheel, some people don't.
yeah.
But the idea is to look at it from the perspective of what the flow is doing. And while flow for me is kind of low on my list, it still is
Mhm,
huge. It still is on my list. I think I've got a list of like 8 things that I look at,
mhm,
and it's the flow is huge, and there has been a little bit of put flow but not a lot.
mhm,
And when you have a presidential election cycle like we're coming into, it's been pretty
mhm.
interesting to watch because it really hasn't been that much put flow.
Yeah, exactly. Especially with NVIDIA, there's so much riding on it, and you see so many analyst upgrades. And just based on just a technical analysis combined with flow, we do see a flag building on NVIDIA. We have that major dip bought right back up, and we're in like a holding pattern. And um, pretty much, I see it's very similar to something like how do
Now
I found it?
I'm
Something
seeing that
like this, like a little flag too. That's like a little holding pattern
I'm
right
seeing that you're
here. So
using a
it's very
24
similar.
hour, not a daily.
Yes,
So
because
is
I
there a
do have
reason?
after hours
Okay,
data up on TradingView, so 24-hour helps a lot. If
perfect.
when market opens at 5, like we'll be able to see the accurate trading price. That's why I have daily all the time.
And
Not daily, but 24-hour.
your PST, so your Pacific Standard, and the 24-hour
Yeah.
really helps. I moved to using extended hours, not because there's a lot of volume in extended hours, but because I've seen that there's enough stuff that happens there that gives me key
Mhm.
levels as far as that goes. That's what I wanted to ask you about because I've never asked you that question, which is funny because we've been trading with each other for almost 3 years, and I've never asked that
Mhm.
about the 24. So that's okay. That's beautiful.
It's actually perfect for people that actually like to trade futures too. If they do have after-hour data up, for TradingView, the 24-hour works perfectly. Because
Awesome.
sometimes the 1 day kind of stops and you have to switch it to extended trading hours. But if you have 24-hour and the data up, you don't really have to switch it back and forth. So it's perfect for future trading as well.
Love it.
And I know for NVIDIA, those that are interested in watching the earnings, the biggest one, other than the expectations, if they meet all the revenue, hallmarks of not hallmark but the revenue expectations, the two things you want to look at is guidance for next quarter, and the biggest thing is their Blackwell chips.
Right.
So that's a new thing that had to be extended because I believe they said that the product wasn't up to their standard. They had to delay it, I think, for the next, they said like 3 months, but it could be more because was it SMCI during their earnings report, they pretty much said that they won't get the Blackwell chip until like early next year. So that's something that we need to hear from Jensen Huang, if
Right.
any updates of when it's coming out, or it could possibly be till next year because this is a big next generation chip for like AI and everything. So depending on what he says, it could drastically affect the price action other than guidance. That's the
How much
major
do you
one.
think that supply chain issues could affect that? Just out of curiosity.
For supply chain issues, it's been like that since COVID.
Yeah.
It's just, I think right now, I believe it's about 50-50. For them, they said the Blackwell was more of a design issue, not much of a main reason why it's a supply chain issue. It's more of a design issue, what they
Gotcha.
said last time. So that's something to keep watch because that's their next flagship. So we already know that AI is pretty much the next bubble. They need these NVIDIA chips to run all these micro centers to do AI, chat GDP, everything. So it's going to be really big news, especially if they said that the delay isn't too long, then that's
Right.
perceived as bullish.
Well,
So NVIDIA can potentially send the market higher, depending how they report their earnings. But other than that, for NVIDIA, um, if you if we pull up a lot of the chips that the daily time frame for chips like AMD, if you look at AMD, we have a lot of inside day candles. If you have AMD right here, you're going to see the same thing for AVGO, inside day. Like they're literally waiting for NVIDIA. So it could really drastically change the semiconductors when we look at the ETF. Same thing.
It reminds me a
Inside
lot of
day.
the conversation I had with my husband about we've been looking at different venues for members just because there's so much spam and problems
Yeah.
with Discord, but looking at how Discord is built and what our capabilities are and the, the bots and the how many different ways we can configure our channels, he keeps, finding different ways that could potentially replace Discord. And I keep saying, yeah, in 5 years that might work. And I feel like NVIDIA might be a similar kind of situation. NVIDIA is so far ahead of everyone else. Yes, there are, like, I love AI from a long term, it's in your long term portfolio. But as far as AI goes, NVIDIA is the leader because they have been focused on this for much longer than anyone else has, and it takes a long time to develop what that is from an infrastructure perspective from a company. So it seems like a very similar conversation to can we replace Discord? And the answer is yeah, probably eventually, but maybe
Yeah,
not right now.
eventually with whole AI, the price
Right.
of our channels,
Right.
it has the capability of that. So definitely NVIDIA, just like what a lot of the analysts, it's a buy rating, no matter like how much it's worth. Honestly, I believe it's almost a $3 trillion company. I think, or almost hitting there, but pretty much a lot of estimates are saying that it's still cheap to buy NVIDIA. So who knows? Whoever got in at 90, they must love it right now. I think they're up like 40%.
Yeah, that would be
Whoever bought NVIDIA at
Thor.
90.
That would be Thor, right?
Oh, Thor?
Yep.
Oh, sweet.
Yep.
Yeah.
Yep.
My broker didn't work, so I couldn't even buy anything. I couldn't even log in. Um, so
And where do you trade? What's your broker?
it was TD Ameritrade, but it got bought off by Charles Schwab.
Yeah.
So yeah,
That's
they
one of
didn't
my
see better
two
days.
option trading platforms. And
Yeah.
I moved from E-Trade originally, or not moved from, I split my main trading portfolio because I had an issue at the end of 2020 where I had a 0-day SPY hung up that went
Yeah.
super green. And then I tried to sell it and it just sat there hung up. So then I split half of my portfolio into TD Ameritrade, which was TOS, and now still
Yeah.
TOS, but now bought by Schwab, but not as much of a, I mean, I will say that they're figuring their stuff out. But yeah, so it's not one of the discount brokers, and they should be much faster. The discount brokers are having much more trouble. But
Yeah.
back when NVIDIA was at that level, everyone was having trouble across the board.
Exactly. Yeah, even on like, was it August 5th? I think only a few brokers were able to really log in. I know there were some Robinhood, some, I think IBKR, like Interactive Broker, but I know Fidelity was down, TOS was down, like a lot of the
E-Trade was
major ones
working.
were down.
Yeah, E-Trade was working, and that's where
Oh,
I was super happy
E-Trade,
to
okay.
have kept a split, which it seems kind of silly to keep your money in two different places, but it's for that reason. That's the reason I originally, because I have traded off of E-Trade since 2002, and realized if one order is hung up, I'm not going to put any more
Yeah.
orders in, right? Because I'm not going to trade anymore if something's already not executing well. So that's where I
Mhm.
keep my two separate, but it's kind of funny to see how they go back and forth, but that's why I always suggest don't, it's the term, put all your eggs in one basket.
Mhm.
As you grow your account, it's a good idea to have a couple different brokers because sometimes you choose not to trade in one of them, not because they're a problem broker, but they might be having trouble at that time or
Yeah.
whatever.
Completely agree with that. Maybe I'll split mine. I just have mine on TD Ameritrade. So well, Charles Schwab now.
Yeah.
So thinking of moving to maybe like IBKR just to 24-hour SPX trading. But other than that, I usually like to do swings more. But definitely going back to the TA. ETF for semiconductor, it's literally all inside day. Like
Yep.
they're literally waiting. So um, people that don't know how to trade inside day is usually you have your mother candle, which is usually a bullish engulfing or something very strong. And then the next one is the next few candles or one candle. It's trading within the top and bottom range of the previous candle. And how you usually trade inside day is that when it breaks the high of the mother candle, you'll take calls. If it breaks the low of another candle, you take puts. So it's basically almost like open range breakout, like that type of setup, but you're looking at it on a daily time frame. And usually that's very powerful, move higher or lower, whichever range it breaks. But
And so tell me
the
what's on
more
your chart
compression,
as far as your
oh, go for it.
cloud. Yeah, tell me what's on your chart. What are the colors that you use? So I see a purple line, a white
Oh
line, a
yeah.
cloud.
So I use something called Sati pivot ribbon. So if you typed it up, Saty, it
Oh
should
yeah.
be this one right here. Once basically Sati pivot ribbon is very similar to an EMA cloud. A bullish trend is represented by a green over blue, and orange over red represents a bearish trend. And I combine it with TTM squeeze because if I see a period of consolidation, then I know it's similar to a squeeze is setting up. So one of the perfect example is one of my friends found this one. It wasn't on a daily time frame. It's actually on 65 minutes intraday. So if you look on is it AV? No, sorry, not AVGO. It's ARM. I'm getting mixed up with a lot of the semiconductors.
Right.
But we do see a squeeze setting up right here. A lot of chop. It's not completely breaking out and it's not breaking down, but you see how this is already a period of consolidation. So
Right.
usually when a squeeze happens, the TTM squeeze would fire something called a green dot after a series of like orange, red, and black dots that represents compression. Once it fires, and if it fires to the upside, is usually represented by a teal histogram. If it fires down to the downside, it represents like a red histogram to the downside. So looking at the setup after a period of like a couple of days of squeezing, ARM is actually set to really target, I believe, 150. I do have something called SR channel because I didn't post my pink lines yet for this setup,
Yeah, but
but pretty much
that's
it's going to
support
target right
support and
here.
resistance. I mean, that's the SR channel. That's what that means is support and
Yeah.
resistance channels. Okay.
Mhm. So that's how I know the setup is more likely up. So unless NVIDIA disappoints, we do see a failed setup. But looking at everything going on right here, where we have the squeeze, is finally firing to the upside, we're most likely going to target this next resistance at 150.
So
So
curious to see the difference between, so you've got a 65-minute up versus 1 hour. So
mhm.
60 minutes versus 1 hour, just to see what that does on the chart.
Oh yeah, I could switch it. So there's a reason why I choose 65 minutes. So for the 1 hour, you do see the squeeze already firing. The reason why I use 65 minute is that within a 24-hour time period, the 65 minute close exactly within 24 hours. If it's in the 1 hour, you do have 20 minute, I think it's 20 to 25 minute, that's a little bit off.
Yep.
That's why I use 65 minute candle
Perfect.
instead of the 1 hour. But I know some people that don't have the premium version of TradingView, they won't let you use the 65 minute. They already have it preset. So if you have the premium version, you can do 65 minute. If you have the free version, you're kind of limited to 1 hour. It doesn't really change much, but for me, I like to see the candle close exactly 24 hours. So it it works out for me.
Well, and it's just a little bit. If you're thinking about it from a trading perspective, this is our trading business. So paying a little bit of money, TradingView is not terribly expensive and it definitely has its limitations, but a
Mhm.
little bit of money, and I'm not like an affiliate or whatever of TradingView, but I do think you should have your
Mhm.
tools set up where you can actually adapt and change to what you need to see. So I think that's huge because a lot of people are like, "Oh, that's not on the free." And I'm like, "Well, yes, but it's not that much money to upgrade to the basic level beyond your free for TradingView and be able to have access to a little more adaptability."
That's true. But like sometimes their broker does allow it too.
Yeah.
I know on my TOS, they do have that for free. It's just some people don't have TOS. So it just depends on what broker you have and what they offer. But definitely, if people are due looking into TradingView, the cheapest one is the annual during Black Friday. That's it. If you do buy it monthly, it's cheaper. But if you're able to front out like $300 for the annual, you save like $300 down the
I
long
don't
run.
even think it was 300. So I buy them a year or two ahead of time. I think I have like 18 months credit ahead. So
Mhm.
I think it's so much discount that the like the highest level where you can have 8 charts and all kinds of indicators
Mhm.
is slightly more than the like, or maybe right at the same price as monthly on the mid range. I can't remember exactly, but the idea
Mhm.
is wait until you got a sale, and Black Friday into Christmas and sometimes New Year's they'll offer it as well. But the idea
Mhm.
is a little bit of money spent into a charting platform if you really want to have that deeper dive. And of course, TOS does have it way more flexible. So using
Mhm.
the desktop version for charting will replace that. So if you don't want to spend money, I just don't find TOS to be as great as far as charting platform because there's so many less indicators and so much less capability in general, but it is free for things like that.
I completely agree. And TOS may be a little bit harder for a lot of people to chart. TradingView makes it very simple and easy. So it just depends on the individual, if they're fine with TOS or they want something a little bit more pleasing to the eye and also easier to chart, would probably be
I
TradingView.
I will
I know that.
say that that's a super valid point because I've worked with people from a coaching perspective that have maybe used TOS for a year or two, so they've been there, they're not brand
Mhm.
new to it, and they're slower on TOS than they are on TradingView after one day of
Mhm.
practice. So it is that the TradingView interface is much more user friendly, and I've seen people, have traded on TOS for years and are super fast. There's no difference because they're used to what that looks like. But if you're newer
Mhm.
starting out charting, I would say that like basic entry level for a month or two while we're waiting on the Black Friday would be a good idea
Mhm.
because you can learn TradingView so much faster. And again, back to I'm not an affiliate with TradingView. This has just been my experience and my observation with working with people over many years.
Yeah, completely agree. I know there's other ones like Transpire, but I think that one's like 1,200. So there's some that's a lot more expensive,
It's
honestly, but it
and
just
I've
depends on the
had
individual
TrendSpider for two
overall.
yearly memberships thinking, okay, I'm gonna work with this. And I always go back to TradingView
Hmm.
and I just keep going back to it. So having paid two yearly memberships, trying to buy it down for TrendSpider,
Hmm.
I love the idea of it, but
Yeah.
from I just need it to like point and go and be working on the things that I'm able to integrate. There's definitely multiple trading platforms, and I do think that we're going to see probably the advent of
Hmm.
some better environments than TradingView, but so far, not so much.
Yeah, I know I do have some people that really like Transpire just because of some of the special like
Yeah.
indicators that they offer. But for me, I just feel like price wise, trading views within my budget, and I do use it a lot. So I just figured, I like this one more than Transpider,
Yeah.
just from a price point of view. And
At price point and
I can
experience.
tell that.
So I call it stay in
Yeah.
my lane. I'm going to stay in my lane of what's working for me and it's more cost effective. So that is very individual, just like trading is. We each have our own area of expertise or area that we maybe see better. So that is the
Mhm.
charting platform is not as important as being able to extract out the information that make you able to make good trading decisions.
Exactly. And let's pivot to the market of what we're going to see. So obviously, we just couple points away from all time high. You know, 5 6, let's say 5 6 70, pretty
Right.
much. And we have a little bit of, I think, the bull gap. Um, I think let me go weekly. Yeah, just a few. There's a few points away from all time high, and honestly, people that don't understand gaps, a bull gap is created when we have a gap up, and a bear gap is created when we have a gap down. So people that don't aren't familiar with gaps, I like to pinpoint these out on the 65 minute because it looks easier on the 65 minute than daily. These gaps could act as magnets because market loves to fill gaps. They won't 100% fill gaps all the time, but majority of the time they do like to fill gaps, and they do act as intraday support and resistance. So for example, we do have let's see, one, two, three, like let's say three gaps, almost four gaps filled by the bulls during the time that we had our downtrend in August, or not early August, like July all the way to early August. We have these bear gaps that were open. So usually for bulls, if they want to fill these gaps, like let's say from here, it's 5250 on the high and this one on the bottom 5302. So there's almost like a 50-point move right here. For intraday, if bulls are managed to penetrate the gap and fill it, that once the gap is filled, it'll act as an intraday resistance. Same over here for bull gap. If it gets filled, once it's filled, it acts as an intraday support. So those that like to do reversal trades, you wait for these gaps to fill and play the reversal play for calls or puts. That's usually what happens. But on a macro view or long view, I meant more of a longer view. The longer these gaps remain open, the stronger resistance or support they are. So right here, because this bear gap has been remaining for a while, it's taking a while for bulls to fill this gap. And regarding that, the trend. If you see a series of bull gaps remaining, well, this one's closed, but this one's open. This one was filled, but this one's open. So we have two open bear gaps currently in this time frame, and then we have one small bear gap open. The more gaps or more series of gaps are open, it tells you trend sentiment. So if we have stronger bear gaps still open, we're leaning more bearish. So if you think back the last couple weeks before this bull gap was created, we had like four bear gaps. So that's a sentiment change to the bearish side. But once we start filling these gaps, it's starting to change into more bullish sentiment because we're having more bull gaps created. So you can see on the 65-minute, we actually have multiple bull gaps open here, here, and here. So also here. So four bull gaps to one small bear gap. So the sentiment right now is bulls are in control. We are in a consolidation period, either with NVIDIA's help or Friday's help. We'll potentially fill this bear gap and have some resistance near this bear gap before we potentially push higher or we roll over. So that's my sentiment on the overall market, is that we're actually recharging to test to fill this bear gap. And once it fills this bear gap, it's either we move to new all-time high or we potentially try to fill this bull gap right here. So that's how I see the market.
How do you make your determinations? So you're switching back and forth from 24 hours to the 65-minute, which is effectively the 1 hour. So when do you make those determinations? How do you decide I'm going to look from here to here? So for me, I stair step down. I go weekly, daily, 4 hour, 1 hour, just kind of systematically down. But where do you make those determinations? Because it is different for sure. And that's what I love about a trading community is we all have different backgrounds, and they should not be all from the same place, or there's no place for the individual. And so I'd love to hear that feedback.
So I like to switch between a 24-hour and 65-minute is because if I'm looking at a day trade, I like to look at the 65-minute because if I know we're in a gap, I want to catch the reversal. So I like to look at the 65-minute. For the daily chart, if I'm going to swing, I want to see where is the next gap. So let's say we're right here and we haven't moved up yet and we have this open bear gap, then I know most likely we're going to try to retest this gap because the momentum shifted to bullish. Because if you pull it up on a 65-minute, we already have two bull gaps open and we filled these well, not this top one, but we filled multiple bear gaps and we had this top one left open. So when gaps are filled, the trend changes, like the trend sentiment changes from bearish to bullish because we filled
Exactly.
three gaps already. Yeah. So I like to switch between like intraday and swings because if I do have time away from my day job, I like to day trade more. But if I don't, swings are usually my preference. So that's why I like to look at the daily
Perfect.
for the trend and then 65-minute for entry. So
So, and if you guys
yeah,
notice, it goes
that's
from 4 hour to 24 hours. She doesn't even have daily on her chart selection. And so, if you've not done that, it's worth testing. So, one of the things I want to reinforce is that just because something like this works for one person, I'm not going to switch automatically because it works for Eva. I'm going to test it side by side over probably 30 to 60 days and see for me if I can see how well it works together. And it might not work for me and it might work perfect for Eva. And it might be the opposite. Something that might work for me might not work for her or one of our other analysts. So it's important that when you're doing exploration into new concepts that you're not then making trading decisions just because it worked for someone else, because it might work perfect for them, but your executions might not be the same based on the feedback from the charts or from your understanding of the chart or whatever that is. So the idea is to expose you to different concepts. I'm definitely going to test the 65. I've done a lot of different ones. The 78 is something I've tested for a long time. I still haven't decided that that's something that works
mhm,
better for me than other things. So it's important that everyone remembers that's listening. It is an individual kind of experience, and you should take these concepts, not make trade decisions based on them, but look at them and see if maybe down the road they will help you. Because obviously, Eva has been around for a long time, trading super well, but you would have to have exactly the same response to the same situations. So it's a learning concept, and trading is always an ever developing, based on emotional kind of response to situations. And that can be your personal situations, it can be the environment of the market because you're thinking about macro or other things. But it's always going to go back
mhm.
to how you're actually executing against what you're seeing on the charts. And that's what's going to make the biggest difference in general. So it's actually really neat to see this. I can't believe we've never talked about these things specifically. You know, life is short. We might as well talk about them now. So that was exciting.
Yeah, I like what Cedar says. There's really multiple ways of trading, and it all comes down to the individual to see what fits their trading style. So, like maybe if my swing style might not work, maybe you might like my day trade style. It just depends on the individual. So, yeah, overall, this is basically what I see in the market. It really honestly comes down to how the market perceives NVIDIA earnings. And then if that reacts well, then if everything goes well with the PCE data, which is on Friday, definitely that's another factor that the Feds use to determine how much rate cuts, because Jerome Powell already confirmed there will be a rate cut in September. We just don't know if it's a quarter of a percentage or half a percentage. So
And
just gotta keep watching
I'm
for
a
that.
point 0.5 camp. I think that readjusting the jobs report by 818,000 gave him a hall pass to be able
Mhm.
to do the point 0.5 and
Yeah.
not have the repercussions that would have been the fear factor behind that, which, I try to
Hmm.
look at from a bigger picture, but it also has a lot to do with where we are economically, and that's huge. So making sure you guys are paying attention to the data that's in Analyst Insight. So when that data is going to be reporting. And I get the question all the time, what happens if job numbers are good, or what happens if, and you could fill in the blank, if they're good or bad, what does that mean? It doesn't matter. The market will tell you what the response is. So how the PA responds to it, it's your job as a trader to know that that data is coming out, so you're not accidentally in a position that could go against you massively, and you're like, oh, I didn't know PCE was coming out Friday morning, as opposed to trying to interpret the data. And I say this all the time, every time I think, and we're going to use that in quotations, every time I think, it costs me money. Every time I react to what the price is, I'm okay. So me trying to interpret it, that's not, I'm not a like economic analyst. I would like to think, having watched the market for 22 years, I have a pretty good idea of what kind of response might happen. But it all is going to boil back to the individual traders, those size traders who are moving the market, how they were positioned prior to this event. And are they closing positions? Are they opening positions? You know, are they selling to close? Are they buying to close? Are they selling to open? Are they buying to open? Or are they sitting in cash? And then our job as traders is to come in and respond to that. So it's really important when we talk about this data to not think, oh, I'm going to be in there because the news.
Some people like news play, but
They do,
definitely
but it's
the way
gambling most of the
they're,
time, right?
yeah, they
It's
risk
really
reward.
sell the news, right? You should have always already been positioned most of the time, and that's where that sell the news concept comes from, is not sell, go short on the news, but you're, by the time the news post, by the time they tell us something, you're too late. That's the sell the news concept. And it's, we're not trying to gamble, we're not trying to do any of that. We're trying to look at what the chart looks like. And the news, the sell the news, responds to, we're trading the chart, and the news is kind of an excuse for where the chart went, but the chart was already going to go there, which is why we focus so much on the TA stuff, like Eva was showing, and which is different than what I do, but it's still, a chart is a chart is a chart, and we always have to go back to that. So I love the difference, but similar from, we're trading the chart, we're not trading the actual event. We're aware of the event, we know it could cause some volatility, but we're not letting it impact our decisions. We're thinking about what we can trade in the meantime based on the chart.
And one last thing to hop on what you just said. Usually price action precedes news. So they usually will tell you before the news even happens.
Oh, we've
So
known so much on the chart
yeah,
way before anything dropped. And I'm like, wait, what's happening? What's going on with that chart? And then an hour later, we get the news and we're like, oh, that's going to get blamed for this chart right here.
yeah, it makes sense. So
Yeah.
yeah, definitely. Well,
Awesome. Well, I'm
guess this
excited.
is our
I love
Sunday
it.
recap.
Yeah, no, it's beautiful, and it's like a different take on the what I normally talk about, and that's what I wanted to have you come on and do, is what your individual view is. And like I said, we've been trading together almost 3 years, and it's neat to see a lot of the confluence when you and I hardly ever talk at all, although we talk, through the time kind of in the background, but not on a like 4 times a day, 5 times a day, like back and forth through DMs. But we still have a very similar outlook in general, which I love. I think of that as confluence. And so it's awesome to catch up with you. So happy Sunday.
Well, happy Sunday to you and everybody. Let's try to kill it in this market
Let's
this
do it,
week.
right?
The
Well,
end of August too. I think we have month end rebalancing too. So
yeah, month end
it's gonna be
rebalancing,
fun.
headed into a holiday
Yeah.
week. I mean, it can be interesting to trade, and we are beyond the FOMC minutes coming out, and Jackson Hole and that kind of stuff. But it's always like that, isn't there? Always something, and the idea is to make sure that you're just kind of dodging those potholes, like avoiding the stuff that can get you
Exactly.
in really big trouble, not oversizing, really paying attention to where you are psychology wise with your individual trading business, and ultimately keeping the powder dry so that you still have a trading account. I have one more question for you, Eva. I
Yes.
know we've talked about futures trading, and I got back into futures pretty heavily almost 3 years ago, but I'm trading I'm going to say about 60% futures and about 40% options.
Mhm.
Are you trading futures at all?
I do not, but I do have plans to trade in the future because I literally watch ES movement to trade my XPX calls
Right.
or puts because ES moves like a couple seconds before XPX price action reacts to it. So that split second kind of gives you that little leg up. If you see ES volume rising, then more than not, XPX will fall the same way. So you can actually get in before that volume pop. So
And I do have
that's
some people
I
ask
love to
me,
look at
are
ES.
futures trading ahead? Futures doesn't mean in the future.
Mhm.
There is less volume in the ES futures than there is SPX. So we have to make sure that we get
Mhm.
that out there and address that part. I got back into futures because I was not trading SPY well off the SPY chart, and I've traded QQQ since
Mhm.
2002. And so that chart makes perfect sense to me. But when I stepped into, or maybe I should back up, when I saw that QQQ was trading a little more volatile and a little lower liquidity on the options contracts years,
Mhm.
let's see, back in 20, late 20, no, mid 2021, let's say, that I'm like, let me look and see why people are trading SPY so much more, because while I traded SPY some historically, I'd mostly been QQQ. So I saw that SPY and ES were trading from a volatility perspective similar to what tech used to. And sometimes the aggressive reversal moves on QQQ were, I'm like, really? What, this is almost like SPX. What are we doing? So I
Mhm.
started looking back at ES to see if I could understand SPY a little bit better. And when I started doing that, I started trading SPY better. So then the next step was, well, if I'm already looking at the ES chart, I might as well be trading futures. And that's where we stepped back into futures. And I stopped trading it because my kids were little and I was spending too much time on charts. So, I mean, it makes sense
Mhm.
logically. Kids are not as little now, not in like reading bedtime stories, that kind of thing. But that bigger picture, seeing more chart structure for those of you who are trading different products. And I have a lot of people who keep finding that NQ is killing them on futures. If you're having trouble with futures, I'm going to heavily recommend moving to ES for the same reason. And Eva's even looking at ES, not trading futures, trading SPX and SPY and other things. So it's important. I don't want to cross correlate things too much, but you also want to look at a deeper level, because the stuff that I was missing trading SPY that's available on ES is from a structure perspective, not from a volume perspective, but where those swing lows were in the overnight, or maybe where the overnight low or overnight high was, that didn't happen in the extended hours on the individual ticker. So it's important that you're expanding, constantly learning, and never thinking that you know everything, because, well, I would hope that anybody successful long term doesn't think they know everything, because as soon as you do, you're going to get clapped. And I've experienced that more times than I would ever hope could ever happen, but I think that's the evolution of a trader. Every time you think you know what's happening, you're probably about to get flipped.
Yes, market loves the humble people.
Yep.
It does. So, just follow your trading rules. Just make sure, you take profits as you go. Don't try to hit for those home runs. Usually the runners will hit the home runs. So just be consistent. Don't try to gamble as much. Then you should have a pretty long career in trading. And also patience too.
Yep.
Patience is
Patience,
always hard.
patience, keep the powder dry. Exactly. It's not about getting rich overnight. The more you think about get rich quick, the more you're going to get poor quick. You're going to lose all your money. So just be patient, take a deep breath, and live to fight another day. Eva, it was awesome to catch up with you, and I'm looking forward to doing this at least a couple times a month. So I'm really excited.
Sounds good. I'm excited too. Well, I hope everybody have a great Sunday and let's kill it this coming week.
Let's do it.
So, all right. You
Okay.
guys have a great one.
See you
Thank
later.
you.
Bye.